Hey everybody, I hope you had a great or are having a great holiday. We are back from our campfire Christmas. We had a great time. Everybody's still alive. Camper needs some help, but all in all, we had a good time. Hey, we only got a few days left of 2019. I wanted to make sure and get this to you. This is going to be kind of a long note. The words below are a lot longer than this video, and this video is long enough. So I hope to goodness it gives you some help. I've had a lot of questions here towards the end of the year about what people can do to save money on taxes. Actually, it started probably back in April when people started realizing the tax situation had changed so much with the new Tax Cuts and Jobs Act. And so without further ado, let's get on it. I'm just going to hit the highlights here. The details are in the email below. If you have any questions, please shoot me an email, private message, whatever the easiest way is to get a hold of me. Please shoot me a message. I'll do my best to get back to you before the year end, because some of this stuff, obviously, given that it's year end already, we're 5 days left, we are definitely in time sensitive nature. So I'm going to break this up into two bits. I'm going to talk to my business owner people first, and then my individuals second. So feel free to skip ahead and see if I've started talking about individuals. I would do a costume change, and then that way you'd know I'm talking about the individuals, but I don't have time for that either. So anyway, bear with me as we go. I've simplified these, obviously, for purposes of this message. So let me just get right on it. Number one, age-old thing we've been doing for years and years and years. Business, you're flush with some cash. You want to reduce some expenses. You had a good year. What's one way you can do that? Prepay some expenses. IRS has a safe harbor of up to 12 months. So if you know you're going to need some materials next year to build some stuff, or whatever it is you spend money on, your accounting services, pay your accountant early. No, don't. I got to pay taxes on that if you do. But no, that's also an option. Pay anything that you know that you're going to spend anyway in 2020, and IRS gives you a safe harbor of up to 12 months. So definitely don't buy into 2021, but if you can buy all the way through 2020 on something, feel free to do it. As long as the cash expense comes out of your account by 12/31, we're all good. Meanwhile, I say cash expense. Obviously, this is for cash basis taxpayers, but I also always get the question on what if I spend on my credit card. Credit card counts. It's not when you're paying off that credit card bill, it's when the transaction became your liability. And in credit card cases, if you're stroking that credit card at the Walmart on, at 11:30 at night on 12/31, it still counts. That also means you didn't get invited to any New Year's Eve parties, but I didn't either, so it's okay, you can do that. The next other time-tested thing that we've been doing for years is, well, we'll just stop billing our clients. We'll just bill them all in January. That's great if you have a lot of money in the bank and you don't mind turning off the spigot for a little bit. If you went and prepaid all your expenses and bought a new car and bought some office equipment and all those things and turned off your clients, you might want to think about the cash flow cycle. Make sure you're going to have money in time to cover it. But if you can do that, all for it. There's nothing wrong with it. You'll just need to buck up and go come January 1st. I did mention buying office equipment. Absolutely. I'm sitting here working on a 5 or 6 year old computer for sure. I did buy it back up a couple of years ago to take advantage of this plan. But yeah, you need that squeaky office chair replaced, or all 10 of them. You need some new furniture because the one you've got is falling apart. You need whatever. It's not just about office equipment. It's machinery and equipment that you might need for your facility, whatever. You can buy it, and with depreciation rules or expensing rules, take that expense in 2019 as long as you put it into business service by December 31. 5 days. So get after it. The next thing to talk about is harvesting capital losses. This applies both in business and personal, so I'm going to hit it in both places in case you did pause and jump to the end. But capital losses come into play, especially on the 199A deduction. Some of us, the magical 199A formula, we don't even understand it. So I'm summarizing it in the email below, but definitely be thinking with an ear towards how I can maximize 199A deduction, QBI deduction, because capital losses help on that taxable income calculation and can actually give you a bigger QBI if you harvest some capital losses against your ordinary income. I did mention vehicles earlier. I've had a couple people every year at the end of the year, can I buy a new car? Yeah, you can buy a new car. Pay real close attention to what I wrote below, because some vehicles are going to get better treatment than others, and you might want to be thinking about that. But there are things we can do with any kind of vehicles that you want to buy, new or used. Thank you to the Tax Cuts and Jobs Act. Used vehicles used to. How about formerly? Formerly, used vehicles didn't get the same treatment that new vehicles did, but now, thanks to Congress from a year ago, that changed to where everything's got about the same benefit. I do want you also to think about, what if I don't want to buy a new car? How can I better use the existing vehicles I have? And I'm going to address that in the email below as well. Always, I get the question, can I put my kids on payroll? Yes, you cannot count all the Dominoes you've been buying for them for years and years and years, or for all year, and say that was payroll. If they didn't lift a finger for your business, can't do that. But if they did lift a finger for your business, then definitely think about putting them on payroll. 5 days left. It's very hard to get a payroll system set up. If you don't know how to get something set up, give me a call. I'll give you some pointers about how to get payroll set up. I even have a quickie company that I use to get it done too. But the big thing on putting kids on payroll is make sure you keep it legitimate. Make sure it passes the smell test. Also, as corporations, the hiring of the kiddos, that works for sole proprietors or single member LLCs that are being treated as sole proprietors for tax purposes. It works for both of you just the same. Corporations, it doesn't work as well, but it could work. It's one way to keep money in the family. If you have an S corporation, speaking of S corporations, if you set up a health plan for yourself as the employee, shareholder, owner, make sure that you've handled that with your W-2, your payroll provider, because that counts right now. If you don't do it by 12/31, then you don't get to count that medical reimbursement that you may have been reimbursing yourself for the insurance as self-employed health insurance. So make sure you take care of that properly. I'm going to address that below as well. And then the last thing, I always get asked about red flags. Everybody's just deathly afraid of audits, and I get it. If I buy this, is it going to raise a flag? If I buy that, is it going to raise a flag? Here's the answer. If you're buying something and it's legitimate for your business, it's okay. It'll pass audit. If you get audited about that one thing that you bought, and you got a receipt and you keep it and you document that it was for a business purpose, then it's okay. So don't worry about that. Now, if everything else you're doing is shady, you might want to think twice about how much you really want to throw on there. The big thing is document everything, make sure that you can back it up. Yes, is there gray area in tax law? There absolutely is. And I won't push a gray area to beige, okay? We play with black and white, but on a gray area, we're gonna look at it and say, hey, look, can we defend this or not? And if we can defend it, then I'm all for it. I'll support it all the way. Okay, now, individual taxpayers. Things changed for you quite a bit this year as well. Primarily in the itemized deduction section, where the standard deduction practically got doubled this year. So it's very much it's a little bit more difficult, challenging, whatever the good word is there, to itemize anymore, especially since they took and compressed how much you could write off in property taxes or state and local income taxes if you have that, if you're in a state that has that. Used to that we could run away with it. If you had a $15,000 property tax bill and you chose to pay one segment of it in January and then the following years in December and pay those within the same year, you could write $30,000 of taxes off. No more. They got capped at $10,000, and that caught a lot of people off guard. Remember, here in the state of Texas, we don't have an income tax, but we do have sales tax and property taxes. So what I always tell people is, if your mortgage company isn't in control of your escrow, take a look at your bills. Typically they're coming 2 or 3 at a time. They're not just one or the other or whatever. And just partition them out, do the math, figure out, okay, you know what, in sales tax, I usually, like last year, I think, $1,000 or something, or $1,800, whatever your number is. Look at what the sales tax piece was that you got to write off. And if you need help with calculating that, you can go to irs.gov. There's calculators on there to help you figure that. But you can look and go, okay, you know what, I've got about $8,200, let's say, that I can use of property taxes to cap. And you're sitting here staring at an $8,000 property tax bill and a $5,000 property tax bill. Do the math. Pay the $8,000, hold the $5,000, because it's not due till January 31st before you start getting a penalty. Put the $5,000 on next year, it'll be $5,000 again come October of next year, and you can pay it before December 31, and then you've got those two together, and you got the $8,000 to carry over to the following year, and you can just keep parlaying. Yeah, eventually it catches up. But if you can slide that out and maximize your benefit of the property tax, it's a great thing. Let's see. I mentioned harvesting capital losses. That's a big thing on the personal tax scenario. at all times. The big rule, and this has been a confusing thing, I've gotten questions on it even this year. The big rule of thumb is you can carry over a $3,000 net capital loss every year. If you sell $50,000 worth of losses in a stock portfolio, but you have $40,000 worth of gains, then guess what? You have $10,000 in net loss. How much can you take? $3,000. How much carries over? $7,000. The following year, you have $5,000 worth of gain. You still have $7,000 worth of losses to carry over against it. So guess what? You report 0 gains. That leaves you with $2,000. How many did I say you could take at every year? You can show a net capital loss every year of $3,000. So guess what? You're going to show a $2,000 loss next year, and it's done. So that's almost like a tax-free gain in 2020. So that's kind of how that works. I've got it detailed below. It still confuses people, and I get it. Call me if you have any questions on that. Let's talk a little about family planning. I got one couple I know that's getting married on January 1st. And we've already run their tax returns, and that seemed to be beneficial. People think it is so unromantic, and I get it. It is very unromantic to think about your tax situation, but hey, it works for people, okay? So if you're considering getting married and into next year, and you don't have to worry about a big plan, take a look at your tax scenario and say, well, is it going to be beneficial? Because guess what the rule is? Whatever your marital status is on 12/31, that is what your marital status was for the entire year. On the flip side, if you're considering getting divorced, now, probably if you're getting divorced in the next 5 days, it's probably kind of already set in stone, but is there any way to push that out into 2020? Push it out into 2020 if it makes tax sense and you guys aren't killing each other for being together. I know the dynamic, I know the situations, and I know how those work, and sometimes it just needs to be done, but if you can, it's one thing to always look at, if you have the ability to with your partner, is what's the biggest benefit for both of us. Last couple of things to talk about: establishing a retirement plan. If you have money left over and you don't have a 401k through work, or if you're self-employed or whatever, make sure you get your retirement plans established by the end of the year. Yes, some self-employed people we can do IRAs for on into next year, but better safe than sorry. Traditional IRAs for sure, you need to do what you can to get those set up by 12/31/19. And if you carry IRAs or 401ks, whatever, I want you to consider converting them to a Roth. It's not too late. Any investment advisor out there knows how to do this, just like they all know how to do harvesting capital losses. If they don't, then they haven't been at this game very long, because this is the primary thing that they do at the end of the year. So I would advise you to look at it. If you don't need the money within the next 5-6 years, converting to a Roth can be a great idea. That is all I have. There's a lot of information in the email below. I hope you enjoy reading it. Again, if you have any questions, please feel free to respond back to me, reach out to me, message me, however you know how to get a hold of me, get a hold of me, and I will do my best to get you some information before January 1st. If I don't see you before then, I hope you have a wonderfully safe end of 2019 and an excellent 2020. Thank you for being clients. Thank you for enduring me at times when it gets a little challenging, when things get a little busy. It's been a great 2019. I can't wait to move into 2020. Have a great one. Bye-bye.